Welcome to the deep dive. You're here because, well, you want to get past the headlines, right? Really understand what's going on without needing, an economics degree.
Exactly. Cut through the noise.
So today we're focusing on the recent developments, maybe interesting is the word, in U.S. trade policy with China and what that could mean globally.
The domino effect, yeah.
We're looking at an analysis piece from Faisal Islam at the BBC. It really digs into the potential, let's say, chaos after Donald Trump's latest tariff moves.
It's a good piece, really insightful.
So our mission basically is to get a handle on the immediate impact, but also the bigger picture, even with some reports of backtracking or adjustments.
Right, and why it matters.
Yeah, why it actually matters to you, maybe indirectly, even if it feels far away.
And I think it's key for listeners to grasp, even with some headlines saying things eased up a bit, the core message from this BBC piece is, look, we're seeing a fundamental shift here. This isn't minor stuff.
No, not just tinkering around the edges.
These are big changes.
Yeah.
Potentially huge consequences down the line.
Absolutely. Initially, there was this spin, wasn't there? Like it was some brilliant 4D chess move.
Yeah, that narrative was out there.
But if you look at what actually happened, what's still in place, even after tweaks, it's a pretty significant protectionist tariff wall.
Something we haven't really seen on this scale since, the 1930s?
Exactly. Since the 30s. So, okay, let's unpack that. What's really striking is how broad this new 10% tariff is.
It's the universality, isn't it? That's what's fascinating. The BBC analysis is clear.
Yeah.
It doesn't matter if a country actually runs a trade surplus with the U.S. Think the UK, Australia.
Right. They buy more from the U.S. than they sell to them.
Correct. They still get hit with this tariff. So it just muddies the waters completely, doesn't it?
It really does. Because you had the EU with a goods deficit gearing up for retaliation. And now they're sort of in the same boat as the UK, which has a totally different trade balance.
The very, very wide net catches everyone.
And that just instantly creates this fog of uncertainty. You read this and you're just left thinking, okay, what about this? What about that?
So many questions.
Like, take medicines. Will there be tariffs on medicines? That's a massive UK export.
Huge implications there for their industry, for consumers.
And it raises that bigger point, doesn't it? About predictability in trade.
Exactly. Businesses need some level of certainty, right, for planning, for investment.
Yeah.
And throwing potential tariffs on something like pharmaceuticals just injects a huge amount of risk.
But wait, it gets even more tangled. There's this port tax detail, kind of little noticed, as the article says.
Oh, yeah, I saw that.
And this really jumped out at me. A potentially massive tax on cargo ships docking in the U.S. if they were made in China.
And the number.
Get this. Over half the entire global merchant fleet fits that description.
Over half. That's actually staggering. I wouldn't have guessed it was that high.
Me neither. And this tax was supposed to kick in almost immediately.
So think about global supply chains, how goods actually move.
Yeah, it's incredibly complex.
You can immediately see how that could cause just, chaos, widespread logistical chaos.
Right. And even with this announced 90-day pause on some of the higher tariffs, rerouting global trade isn't like flipping a switch. It takes time. It's complicated.
Businesses can't just pivot overnight. Impossible.
So this port tax thing just added another layer of immediate, potentially crippling disruption.
Definitely.
So, okay. What we're looking at is the two biggest economies, the U.S. and China,
The heavyweights.
as the BBC puts it vividly, facing off against each other like rutting stags.
Hey, yeah. It paints a picture, doesn't it?
It really does. You can almost feel the tension.
And that image, it captures the sheer scale. This isn't a minor spat.
No.
These tariffs are hitting trade between nations that together account for roughly 30% of all global trade?
30%. It's like clamping down on a major artery of the world economy.
Pretty much blocking it in some areas, yeah.
And we're already seeing real-world consequences, aren't we? It's not just numbers on a page.
No, absolutely not. For China, the article talks about factories actually closing.
Workers losing jobs.
Yeah, displacement.
Yeah.
And Beijing needing this huge stimulus package.
Something on the scale of responding to, a natural disaster.
Precisely. The BBC piece really hammers home the potential hit to China's growth.
And while stimulus can help.
It cushions it, sure.
Yeah.
But it's expensive and maybe not sustainable long term.
Meanwhile, back in the U.S., the likely result seems pretty clear too, right? Higher prices for consumers.
Yeah, surging prices seem likely. I mean, the president could say he doesn't want companies raising prices. But basic economics usually wins out. Those tariff costs, they'll filter down. Probably quite fast.
Yeah, the economic forces are just strong.
Stronger than directives, usually. Increased import costs mean higher prices. Simple as that for a lot of goods.
Here's a twist, right? The ripple effects might not be even everywhere.
That's a really interesting point in the analysis.
Places like Canada, Europe, they might actually see a different picture.
No China-sourced price rises, potentially.
And maybe even price cuts as demand shifts around.
Could happen. It creates this really uneven playing field globally.
Which is crucial to understand. This standoff could really shift, relative competitiveness between regions.
Unexpected consequences, yeah.
Now, the BBC analysis points out quite sharply, trade wars this big, they don't just stay about goods, they tend to spill over.
Into currency markets, absolutely. It's a common pattern.
And that's exactly what we started seeing, right?
We did. Disruption started rippling into credit markets, specifically the U.S. bond market.
Yeah, and the fact that Trump administration actually mentioned it, called the market yippee.
Hey, yeah, yippee. That was quite revealing.
Invaluable reveal, the article calls it, because what happened overnight in Asia was, well, pretty dramatic.
It was. The effective interest rate on U.S. government bonds, it jumped significantly, hit 5%.
5%. I mean, that kind of sharp move, that's not normal for the bond market.
Not at all. That rate basically shows how risky the market thinks U.S. debt is.
So what jump like that means more concern.
More perceived risk, yeah.
Yeah.
Investors getting nervous.
And the comparison drawn in the piece is fascinating, comparing it to the dash for cash during the early pandemic.
Right. Which was a time of extreme uncertainty, market fragility.
Yeah.
The bond market just doesn't usually swing like that. So the fact that rolling back some trade measures was called an emergency policy change, that really tells you how serious the situation felt.
And then there's the elephant in the room, sort of.
Yeah.
Was China deliberately selling U.S. debt?
The big question. The BBC piece leans towards unlikely.
Right, framing it as mutually assured economic destruction.
MAD, yeah. The idea being a massive sell-off hurts China just as much, maybe more, than the U.S. So it's a deterrent.
But just the fact that people are talking about it.
Exactly. It shows how fragile and interconnected this whole U.S.-China economic relationship is.
Very delicate.
So while a huge sell-off might be, self-destructive, the clear message from the bond markets was skepticism.
Deep skepticism about the whole tariff policy.
Yeah. Investors were reacting to the uncertainty, the perceived risks. It was unmistakable.
And the Federal Reserve.
Yeah.
The usual stabilizer.
Doesn't seem like they're about to jump in immediately, no?
So the bond market's jitters just kind of hang there, amplifying the sense of risk.
Right. The Fed holding back, or seeming to, leaves the market to give its own sort of unfiltered verdict on things.
Okay, so then the analysis pivots, interestingly, to a possible shift in U.S. strategy. Treasury Secretary Scott Bessent apparently pushing for trade deals with allies.
As a way to counter China, yeah.
And the irony there is just, well, you kind of have to notice it, right?
It's pretty stark, isn't it? Given the earlier rhetoric.
I mean, not long ago, these same allies were being called, what was it? Cheaters, looters, and pillagers.
Something like that, yeah. Pretty harsh language.
So this sudden shift suggests maybe a realization that they need a broader coalition.
It seems likely. A recognition that tackling China's economic clout needs allies, not alienated partners.
It really makes you wonder about the strategy all along, though, especially with some of the, stranger aspects the article mentions.
Right.
Tariffs on Penguin Islands or on struggling African economies.
Cite those examples.
And the retroactive changes to rates, the confusing calculation methods. It all feels a bit...
ad hoc. Random.
Yeah, ad hoc is a good word. Not exactly predictable.
And that lack of a clear, consistent approach, it definitely damages U.S. credibility.
How can other countries negotiate? Allies or adversaries?
Exactly. If the rules keep changing arbitrarily, why would you engage in good faith? It's incredibly difficult.
And the end result of all that, according to the BBC analysis, is that it's kind of handed leverage back to everyone else.
Makes sense. Why rush into talks under such unpredictable, sort of capricious conditions?
You wouldn't, would you?
No. The uncertainty just makes it unappealing for other countries to make big commitments or concessions to the U.S. right now.
They're more likely to just wait and see.
Adopt a cautious stance, yeah. Keep their options open while things are so uncertain.
So where does that leave things now? The piece ends by noting a sort of calm at the moment.
Which, welcome, of course.
But likely to be short-lived. And that feels right, doesn't it?
That underlying instability. That's a key takeaway for listeners, I think.
Yeah.
The core issues driving all this, they haven't gone away. The potential for more disruption, more escalation, it's still very much there.
So for you listening, trying to piece this together, the U.S. has put up significant tariffs despite some walkbacks.
Big barriers are still in place.
And that's created a lot of economic uncertainty, setting up this potential long standoff with China and sending real tremors through global markets. It's not just separate incidents.
No, it's all connected, a big interconnected puzzle.
With potential real-world impacts that could affect all of us somehow.
Absolutely. Remember how linked the modern global economy is? Disruptions in one major part?
Like U.S.-China trade.
Can ripple out everywhere. Across sectors, across countries. Cascading effects.
Which brings us to a final thought for you to chew on. Given that fragility we saw in the bond markets and these shifting alliances, what other vulnerabilities might pop up unexpectedly in the global economy?
What haven't we seen yet?
Right. And how do individuals maybe need to think about preparing for, well, what looks like ongoing volatility, maybe for years?
It's not just about the news today, is it?
No, it's thinking longer term about what these immediate actions might set in motion. Anyway, thanks for taking this deep dive with us.